Good afternoon, everybody. Welcome to TraderMerlin show. As you're probably hearing from the background music, I have construction going on 6 feet from my studio window, so you're going to hear a lot of weird banging. They're putting the roof on today, so very annoying, but not much I can do. Hopefully we don't get the mariachi music and the screaming that I've been hearing all day in your microphone. So hope you're all doing well. Hope you had a good trading session out there. I'm going to dive right into our topic du jour so we can get in as much as possible today. My guest joining me is from barchart.com. We're going to talk about trading energy, we'll talk about broad markets, and we'll talk about our upcoming webinar, which we're going to be doing next Wednesday. My guest is none other than the great John Rowland. John, how you doing, my friend?
Hello, sir.
Hello. Good to see you.
Good to see you.
What's new in your world? Any construction going on at your bedroom windows?
To be honest, no. But we've had like this, I think about building an ark. I think we've gotten like 7 inches of rain over the last 4 days. It just keeps like raining. There's like this storm that's kind of stuck over North Carolina. So I think maybe I got to start building an ark, though.
Very well, all right. Well, at least you can float away with it. Huh? We could.
Yeah.
As the graphic will dictate, I'll bring the graphic back up here for everybody. I wanted to do an AI something with something along with energy, and so I said, take this picture of John and throw it over some. I said actually put a blue flame in his right hand and a mini oil rig in his left hand, and this is the picture that came up. So I actually like it. Got a little refinery in the background, and John looking very, very sophisticated, I might add. So let's start there and just work our way down from, we can start with crude oil and natural gas. Let's cover those two and then dive into more timely, broader markets. What's your take on our current energy situation?
Well, first of all, come on. That doesn't look like me. That looks like meatloaf. I don't know. What's going on there?
You look I say you look very dapper. Right? The eyebrows, it's kind of a Michael Dukakis look with those eyebrows, but we'll let it slide.
All right. So, be honest with you, with crude oil, I've not really been watching the market because it's just kind of been like in this sideways, this range. I mean, if you look at WTI or Brent, for WTI, we've been kind of stuck in this, $20 range between like what, $88 and $68.
Mm-hmm. I mean, just the last month, it's really been between 68 and 78. I mean, it's $10 range.
Yeah. So I mean, I just feel like the market is a lack of any kind of catalyst, one way or the other. I mean, on one side you've got, is there this reinflation, the Fed pausing, or we're going to see inflation come back? We're kind of seeing it. A lot of the other commodities have done, have had these big runs in the last month or so. The dollar part of that equation. On the other hand, China's not as strong as that reopening that they thought.
Mm-hmm.
They've had to inject some liquidity into their system. So that part of the demand for crude oil is not there. And then you got the other side of the story with OPEC saying, "Oh, don't be short." Right. What did the minister say? I forget.
He said if you're short, if you're betting against or betting that oil's going to go down, expect some ouchie. I love that you said ouchie. Very, very PC, sir.
Yeah, exactly. So, but I think the Saudis, this is typical of them. They tend to try to jawbone the market around, but I don't think they need to make much of an adjustment in terms of cutting back production to help rebalance the market. It just seems like every time they go to rebalance, the supply demand picture changes again on them. Mm-hmm. Big picture, longer horizon. There's less capital expenditures in the U.S. and this fear of a recession. There's recessionary pressures on crude oil. So I still think the market is in a range bound and it is probably going to struggle to get out of this range to the upside. The catalyst would be if the economy picks up or China picks up, and also if you compound that with a weaker dollar. So I mean that's kind of the big picture, macro, micro, elevator pitch for crude oil.
Nice. With the production side of things, the lower that this goes, the less likely you're going to see more capital expenditure on the part of oil refiners and just extractors trying to get out of the ground. If we keep drifting lower and lower and lower, well, there's no meat on that bone. And I don't know what that break-even point is. I think years ago it was like $20, and it's not my area of expertise to know exactly what it would cost to extract a barrel of oil from the ground. But if this keeps drifting, I agree with you. I think you'll probably see it drift even quicker because there'll be less money flowing into the industry, which means less supply. And that ultimately might actually help it reach its bottom, right? If
that'll help it rebalance. But
right.
We're talking about 6 month year cycle. It's a little bit longer. I still think, in terms of energy sector, I think there is some opportunities on buying dips, and that's where let's go to natural gas. We're in the injection season where traders they buy gas and store it, or they start to buy, futures contracts to anticipation for the upcoming winter season. So this time of year, the seasonal trend as a trade trend is, look to buy dips. That being said, we came into this season with an overhang of supply from last winter season, which is the reason why we saw that precipitous drop in natural gas prices in the early spring. And then the catalyst that was really kind of driving the market now is this demand for gas that is used for electricity, what we call cooling degree days. And, down in Texas, it's been crazy, crazy hot. And, that is really started this rally over the last week or so. And then I think there was a lot of shorts. There were a lot of shorts in the market. So that kind of compounded it well. And then, we had the commodity index rolls, the Boyle and the UNG and all that helped with a little bit of that. And so, right now, I think what you can look for in natural gas is, again, another range-bound market. But I think there's a lot more potential for to the upside, maybe the spot market or the July contract is going to expire next week. So, we got to start looking at the August contract. But, I'm sure if you have a chart up of the July contract, above 270, then I think you can think about $3 or $3.25 as an upper end of the range through the summer. And then let's see what happens as we go into, the fall and the winter. Again, those 4 contracts are a lot higher right now. Again, if I'm looking at the equities markets, I still think there is some room to play some of the natural gas producers. And if they start to pick up, then, one of the stocks that has kind of been beaten up recently was LNG, which is Cheniere, right? They produce liquid natural gas, and they sell that, to Asia and Europe, and those natural gas prices have been depressed as well, but they're starting to pick up as well. So I think there's your trade. Let's see if liquefied natural gas prices in Asia and Europe start to rebound. That will be supportive to our domestic natural gas prices. And then those producers, the Cheniers, Qateras, and Ranges of the world, plus Cheniere will be, buying opportunities. But again, if you look at all of them in one big giant basket, we're just stuck in the middle, going nowhere fast.
It seems strange to me because, a year ago, we were hearing so much about Russia and how Russia was cutting off supplies and, going to choke out Germany. And I have relatives in Germany, and they saw a 10x increase in their energy bills because of that. So okay, well, this should be good for the domestic natural gas markets and more exporting internationally. It really never seemed like it came to fruition. I was really expecting it to have much more of a surge because of that, but instead the price chart was just the opposite direction, just straight down.
Well, there was that anticipation. We had this huge surge in anticipation of, the beginning of the war, and then the reality, right? That's, the old buy the rumor, sell the news kind of thing. Right? We went into the winter season, and we didn't get winter here in the U.S., and we didn't get a winter in Europe either. So, they kind of stockpiled. If we would have had like a normal winter, we would have, drawn upon that stockpile that it was built in, the fall of last year. Right. We didn't do that, right? So, and that matter of fact, we had a surplus as we came out of the winter season. So I just think it was, and natural gas there's two factors you always look at natural gas prices is weather and economic demand. So natural gas is very, very sensitive to recessionary pressures. And that's why I was, when I look at the equities market, I've kind of been playing sort of the short side, and I'm getting my head into it a lot because my bias of natural gas is that, well, if the economy was really strong or we saw good economic, activity, then natural gas prices should be higher, and we're not. So that's kind of been, my downfall is that my bias.
It's the conundrum, right? You formulate an opinion, you think you're right, and you're like, oh, all these factors point to this happening, and then it doesn't happen, drives you nuts. I'll transition there. I wrote an article for Bar Chart, which I released Monday. Actually, I think it was Monday at like midnight because the markets were closed on Monday. And it makes the argument for a pullback in these markets coming. And I've got the S&P up here, which of course has had a fantastic run this year. Really looking since those March lows, just a wonderful run in the S&P. I could bring up the NASDAQ as well, which is much more significant. And it just feels like it's getting a bit long in the tooth. I feel like all caution has been thrown to the wind. It's like, let's just jump on this gravy train while it's here. And typically when I see that, it leads me to believe we're going to have a market correction. And I thought we were going to start, I actually thought we'd start to see it this week, which we got a couple days. Today bounced a little bit, but what's your thoughts on an impending correction? Is it something that's creeping up in the probability category for you?
Yeah, I think it is. I think, if you look at a lot of different technical indicators and the things that I kind of like to look at, they're all kind of leaning towards, that we're getting in kind of an overbought, or extended rally, or however you want to define it. So, the basic ones, right? And RSIs and stochastics and MACDs, I don't care what time frame you're looking in a weekly or a daily, all these have been getting into elevated levels or in the overbought conditions. But as I know, that markets can stay overbought for longer periods of time. Oh, yeah. What we need to find is when price changes a little bit or momentum slows a little bit, and then we come out of those overbought conditions when, those RSIs or stochastics come out of those levels. That would be kind of more the thing that I'd be looking for. And we're not really seeing that yet, have we? Right?
No, not yet. I think maybe peaked just a little bit over the last couple of days, but today may have negated that. If you were to add a chart or an indicator to a chart, I've got the S&P futures up here right now. Which indicator would you look at? And again, this is just what John likes to look at, but what would you say would be your indicator to add?
Well, I do look at RSI and MACD together as kind of that. They're basically saying the same thing, right? But one's a little bit leading, one's a little bit of a following, lagging. But the one that I kind of like in terms of telling me if price has gone too far, too fast, or extended would be Bollinger Bands. I like them. Now you have to be careful with Bollinger Bands because, just because price goes outside of the two standard deviation does not necessarily mean the market is overbought. You got to wait for the bandwidth to get wider or the bands to turn out. But what I like to look for is when the price goes outside of the bands, what I call band piercing, outside the two standard deviations. And again, I'm really only looking at dailies and weeklies in that assessment.
Right.
And then what I want to see is, wide bandwidth outside. And then just like the RSI and the MACD, I want to see price return inside the band, and then I know there's a higher probability that we're going to get something what is called a mean reversion, and that's kind of what the setups that I'm looking for. But every time the market kind of like gets at the edge of the bands, a lot of these bands are just, it's still making green candles, not making a red candle or a down day candle that would signal that it's going to go back into, back to the mean.
Right. With that, I'm just writing some quick numbers down here off the top of my head.
Look, let's look at the S&P, right? If you put a Bollinger Band on the daily, right? We did get this red candle.
Yep. On Friday,
right? We were outside the band and now we're inside. So that tells me that there's a higher probability in the short run that we're going to go back to the mean.
And the mean, by
which
the way,
brings
is the 20-period moving average. It's this black line in the middle is what he's referencing. So
right, and that comes in, I know, was it 4290, 4300, depending on your chart.
For what I have right now, I think that this is a daily. Yeah, this daily. It's 43.39 as we speak.
Yeah, so somewhere around there, that would be what I would be looking for. You know, besides the technical analysis part, because, well, first of all, you know, RSIs and MACDs, you know, they are lagging indicators. So, I mean, I don't try to rely on them. I do like Bollinger Bands because it is, you know, in the moment. But one of the other things that I kind of like is I like candlestick patterns. And now, you know, there's a lot of different candlestick patterns. But candlestick patterns I think are better as in trading systems as reversal patterns, and most of them are reversal patterns. So I like to look for those reversal type patterns. Now, there's a lot of different reversal patterns. The ones that I kind of take that I like, there's three of them. And that would be what we call a dark cover cloud or a cover cloud. I don't know what they
dark cloud cover.
Cloud cover. Thank you. Which is what we see in the S&P. If you pull up Tesla, then you have the classic bearish engulfing candle. And the other one that I really like that I haven't seen is sometimes they're called twins or pinchers or tweezers. And that's where you get, you know, a green candle and a red candle that have basically the same top, right? The close of the green candle and the opening of the red candle have the same top. I love those ones. Those ones really
and you could argue, that
really good.
You could argue that's almost what happened on Tesla. I'm looking at the chart right now. You know, he had last Monday and Tuesday. All right. Tuesday, because we had a shorter week. So we had our Tuesday and Wednesday. You know, Tuesday was a big up day. Wednesday was the engulfing. It's an engulfing pattern, but you could almost call that tweezer top because it had that big green and then the red came right back down the next day.
Yeah, that's definitely an engulfing, and you're right. You know, from a statistical standpoint, it is. But I really like to see where the opening of, the close of the green is the opening of the red. I think that is much more significant to me. So that's kind of some of the tools that I like to look at.
You know, while I'm on Bollinger Bands, let me explain a couple of things for the folks at home. When you look at this chart, obviously the Bollinger Bands is that gray kind of shaded area on the screen. And the important thing to remember here is it's just statistical probability. That's all Bollinger Bands is. It takes the 20-period moving average, and then it does a one standard deviation above
two standard deviations.
Well, Bollinger is two, but the standard is two standard deviations. But if you do one standard deviation, you're looking at 68% of all the results should be within one.
Right.
This is two standard deviations, which means about 95% of price action should be within that shaded area. So you're anything you see outside of those bands really has a 4% chance of being a 4.5% chance of being there. So it's not saying that it has to come back down. If you notice here on Tesla, for example, we've been outside the Bollinger Bands. If you look back to May 30th, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days out of probably 13, it was outside. So remember, the trend is your friend until the bend at the end, as Margaret just puts in there. Trend is still up. It is still up. But to John's point, when you have an action like just the last couple of days where it's retracing significantly, then that would lead you to believe that now you're going to get that pause back down to the mean reversion. So let me go and show you just the, I have the S&P up here, which I think is a better example of this so we can see the full scope of it. Oops. Oh, 1 second. I'm wondering why my watch list just switched over. All right, well, I'll just I'll do the September futures contract then. We'll keep it there. There we go.
Right, and as you pull up the Bollinger Bands on the S&P, notice that, you know, back in early June, we did pop outside of the bands. You know, we outside the standard deviation, but the bands are still relatively narrow and just starting to expand. What we want to find is when those bandwidths get really wide. In other words, you know, the distance between the outer band from the mean is there's this divergence in price. So when that happens, you know, we're stretching this rubber band, well, at a certain point, you can't stretch the rubber band any farther. And then the more likely that when the pressure is relieved, the market will snap back. That's what we're looking at, right? So,
and that was one of my arguments in my article is like, you're due for a pullback, you're a breather. And it's not to say that the market can't keep running, right? It's just typically if you're a sprinter in the Olympics, you're going to do your event, you have a real quick sprint, you set the world record, you take a little break before you run your next heat. And I think that's kind of the way to look at these markets. And until we get the Fed or economic data that supports big declines, it's just a pullback. Notice that in that article, I didn't say a market crash. I didn't say that this is the end and all of a sudden market's going to go to hell in a handbasket. But certainly, could we see a 4, 5, 6, 7% pullback in the markets? Absolutely. And I think it's a bit overdue, particularly when we look at things like the Nasdaq, which have been just so unbelievably bullish this year.
Well, I think it's healthy too for the market. I just think when the market runs away and doesn't have any kind of pauses, I was taught that bull markets are boring. They kind of just creep along. Bulls take the stairs. And when you start seeing some of these parabolic runs like we've seen, in Tesla, Nvidia, and those likes, that to me, that I don't think that's a healthy bull market. I think that's a sign of speculation or exuberance or however you want to define it, right? I want to see that kind of that staircase climb. So yeah, I think if we believe this market is in a new a bull market, or what I would call an uptrending market, then I like you said, I think the market is due for some kind of a pullback, because we really want to see that conviction, right? That people are going to come back in and put more money to work, right? What happening is we're just kind of building this house of cards that eventually, when it falls over, it's going to fall over, and it's going to fall over hard and fast, right?
Yep. And I think for people like me, I'm not buying the Nasdaq right now, right? I just think it's too overbought. I think it's an unsustainable rally at this point. You're gonna have a correction, so I think it's absolutely healthy. I'm looking to buy the Nasdaq on a pullback, right? I just want to buy it at a discounted price compared to current valuation. So that's kind of my approach to it. And of course, everybody has their own approach to these markets. But if I do go that route, and you guys can see here on, let's say, the Nasdaq 100 futures, that 14,500 mark. Fine, I'd be all right there. I'd be all right at the 14,500 mark to own the Nasdaq or the triple Qs at the basis evaluation, because that means we've actually exceeded the 20-period moving average and now come back below it. So that rubber band flipping from one side to the other, great. Maybe we hit the bottom of the Bollinger Bands before we start to rip up, but the trend is still up. And that's the thing that I have to respect as a intermediate to swing trader.
Right. I mean, I love that number. I'm looking at, I'm looking at was it in Nasdaq 100 as well, and we've been creeping along the outer band, right, the whole way. A lot of green candles. The mean reversion puts it around 13,200 or so. But where was the last breakout? Right, where was the last impulse move, which is right around 14,000? I think. A lot of times what happens is the band, the median level, starts to rise as the market corrects, and they kind of meet in the middle. So the middle of that would be around 14,000. So, I mean, I think that would be a good spot to start nibbling the market. I don't know if I'd go all in there.
No.
Too,
right? These markets, I haven't found any situation where I'm like, I'm going all in. It's been a long time since I found that one. And the last time I did go all in, I was live on the show with 420 put options on the S&P, and that didn't work out so well. 42,000 shares of SPY is a lot.
Right. Meanwhile, if you weren't on TV or on the show and you did it, it would have worked.
It would have worked,
It's like, right, nobody, oh, yeah, sure, okay, I don't believe you, right?
It's funny. I've noticed that, and you tell me, does this work for you as well? But like, I'm as transparent as I can be on this program, and I don't tell all my trades, because I do have this air of superstition, but it seems like whenever I mention a trade that I'm in currently on the program, for example, I'm in silver. I bought some more silver yesterday, and I sold some puts on silver as well as some calls on current positions. That trade's probably going to go against me because I've been talking about it on the air. Do you find that happens to you too?
Yes, yeah, it's kind of like the Murphy's Law of online trading, on live trading, right? Because, you could have the best analysis, but if you're doing it live, you're doomed to lose, right? But if you're setting it at home and you have the same analysis, where nobody can see you, right? I guess, is that kind of like, if a tree falls in the forest, doesn't make a noise kind of thing, right?
Yeah, that's why I always tell people, just remain humble in your trades. Don't brag, don't boast.
Yeah, exactly. Right. Being humble is definitely part of it. Hey, so there's one other technique that I kind of do that maybe your folks will enjoy is, so candlesticks, I think, are these great tools that we can use in terms of pattern recognition. So pull up a chart of Amazon
Okay.
and go to like a 1 hour chart. And again, why I think when I started thinking about reversal patterns, or we always talk about. I know that you talk about it, and I talk about this. Is that we look at multiple time frame analysis, right? And then we rely on the higher time frames to kind of influence the lower time frames, right?
Mm-hmm.
I mean, that's kind of our basis.
Yep.
But there's also another theory that says that when reversals come, they come obviously at the lower time frames before the higher time frames. That makes sense, right?
Right.
So what I like to do is when I get into one of those positions where, let's say, I'm at a higher level, or I'm getting into like the Bollinger Bands, or looking. Actually, I think not Amazon. I want to look at Google. I think was the point I wanted to do. Yeah, sorry, buddy.
It's all good. I'm just driving over here. No worries.
Yeah. So if I'm in one of those situations where I get a piercing, or I get outside a Bollinger Band, then what I want to do is I want to go down to a lower time frame and see what's going on. So here we are at a 1 hour. We're on a 1 hour time frame, and again, I don't look at the Bollinger Bands a lot at the 1 hour time frame. I just I like to look at dailies and weeklies. But we get this piercing. You can see back in June 7th, right?
Yep.
You see this piercing, then we went outside the band, and then we got this green inverted hammer, and then we got this big sell off on that red candle, right? Do you see that?
Yep.
And so if we draw a line, let's say around the bottom of that green candle, that puts us at around 127. So we know that this is where price has transitioned, right? We've went from this up move to something's happened, and now supplies come in, or sellers come in, or however you want to define it. Now, if you jump to, let's say, a daily time frame, let's say,
okay,
and notice that the red line, the 127 level, is defined by that red candle, but the wick is above that 127, which is kind of telling me that the action that I saw at the lower time frame occurred in that that first hour of trading, the first hour and a half of trading. So when I find these reversal patterns in the lower time frames, and then I go to the higher time frames, and those reversal patterns are found inside these wicks, that is a confirmation to me, right? Mm-hmm. So we see the same candle pattern at the daily, this reversal engulfing, however you want to define it, pattern. But the action that we saw in the lower time frame is inside the wick of that candle, and that to me is more of a confirmation. And there's the kind of reversal patterns that I want to look for in doing that multiple time frame analysis. And the more time frames that I can find that start to repeat, which is something called fractal recognition, reinforces the price action that I'm seeing.
And on Google, I'll go back to that 60-minute for you guys. I know some of you may have noticed there. John's talking about the kind of overbought situation that you had with Google. But if I switch this over to the 60, and we'll go back, let's say 1 month, you notice that just a few days ago, going back to this is on the 60-minute for yesterday. Or is this today? It says that the date seems to be wrong here. It seems like 9 a.m.
Yeah, it's 9 a.m. from, I think, the 16th, right?
You got one that you got a bottom where we actually had expanded Bollinger Bands on the hourly, and then we had a long piercing bottoming tail, which is the largest pierce we've seen on this chart here. And then all of a sudden you have that nice follow through that's ripping from the lower Bollinger Band on that hourly. It looks like you're going to hit that upper Bollinger Band, which is very typical. So,
but what time was that piercing at?
Right, the opening.
The 9 a.m.,
yep,
right?
Yep.
Right. Where do, novices make mistakes in the mornings and the opening hour, and, and professionals close the market. So, so that's what kind of, I think that's what you're saying, right? And that's what I'm saying.
Yeah, it was just saying, and I agree with you 100%. Like, I prefer to look at Bollinger Bands, RSI, stochastics. I look at all my indicators, MACD and everything. I look at that I start with the daily. Personally, that's my favorite time frame. I know a lot of people like the weeklies, which is great as well, but I don't I don't really trade that long term to warrant a trade based off the weekly. I might find some supply or demand zone that I find relevant, but typically the daily for me, and then I run through, if I am going to put an indicator on my chart, I'm using it on the daily time frame. I don't generally look at it intraday, but here, you could have used that same basic principle of piercing the lower Bollinger Band, as John points out. Look for that opening hour. If it pierces the opening hour, and then we can go back to the daily time frame and see that kind of confluence there, then adds a little error of probability to your trade.
Well, also, then what if you're looking at a lower time frame and you're taking, let's say, in this case, a long, what you could do is look at the higher time frames. Let's say go, and I know you say you don't use weeklies to, dictate or look for a trade, but the weekly is certainly a time frame that dominates or kind of influences these lower time frames.
Absolutely.
If you go to a weekly time frame, the weekly trend was still up, right?
Mm-hmm.
So you're buying at a lower time frame in a higher time frame uptrend. That's the ideal situation, right?
Yep. No, I think your measure of strength for traders out there is the higher time frame rules all. So, I would say you get a little too far out. Like, I'm not going to be using an annual chart or quarterly chart, but the biggest I will go is weekly time frame, and then from there I work my way down. And if I can find all these things line up on those time frames, then that just adds better probability to whatever trade it is I'm making.
Right. No, exactly.
Excellent. There was a question here, Dave. I don't know if you know this one well. He says, two questions. Thomasina says, slightly off topic, but where on bar charts can I find where Congress people trade? Do you have an insider's buying?
Yes,
portion?
we do.
Do you
on
really?
The top, yes, we do.
Oh, wow.
Up where it says investing, up in the top.
Yep.
Open that up, and it says politicians insider trading.
I was thinking, like, no way they have that. Wow, that's pretty interesting.
We got a spy. It's in Congress, right? The thing is that there's certain rules the politicians have to follow. Now, it doesn't mean they do follow that, but these are just the reported filings to the whatever oversight committee or whatever they have to file to, and then I guess they pass them on to the SEC, and then that's how we get them.
So for all you Nancy Pelosi haters, the ones that keep going off on Nancy Pelosi, I don't see her name on here. She's not on this list.
That's because she dumped out her whole position about it in the end of last year. But since we're on this page, which is kind of interesting, if you go to the insider trading activity,
yep,
not the politician one, and I think it was today. If you scroll down there, I think it's about the third one. No, see, it's 1, 2, 3, 4, 5, 6, 7, 8 down. NVIDIA, right? You see, Mark Stevens sold 118,000 shares for up at a price of $431, and he raised $51 million. We'll go all the way to the right where it says details.
Yep.
See that?
Yep.
Click on that, and that'll show you all the insider activity for NVIDIA, which I think is kind of interesting. And we talk about tops, and we talk about, here are, now I don't see anybody from the C-suite here except for
the CFO.
The CAO.
What's the CAO? Chief Accounting Officer?
Yeah, something like that. But all these members, all these other names, these are all board of director members. So it is kind of curious that, one of the reasons why NVIDIA narrative that I've been told is that, they're telling us that their earnings are going to be outstanding over the next quarter, right? They're going to almost double or whatever from, the previous earnings. And these board members, they sit in these board meetings, and I'm sure they get information about, up sales and production and all this kind of stuff. If you knew that your sales are going to jump from whatever it was, $7 billion to $11 billion, which he said in the last earnings, would you be selling, right? I mean, yes, granted, the stock has gone up, but if your outlook is like, oh, we're going to rip for the next 3 years.
Yeah, but so so it's a good thing you bring that up. I always thought that too, but then I look at it and I go, you know what? This guy, Mark Stevens, who you just pointed out, he still has 4 million shares. He only sold 118,000. So it's not like this dude liquid. He basically said, I need to buy a new yacht. Christmas is coming. It's summer. I want to go to the Hamptons. We're going to party like rock stars.
He needed a little walking around money, right?
Yeah, so, 51 million, no big deal. The one that really just strikes me here is I look down here at Mr. Jensen Huang, who is the CEO. He has 86 million shares of this company. You know, and granted, he just sold 72,000. He made 17 million. He's got, I think this is what, 30, if you make it at $400, 430 bucks a share, I think you're looking at, oh, my math is a little fuzzy here, but I think it's going to be right around $37 billion worth of stock.
Quadrillion, zillion dollars.
Oh,
Yeah,
man.
exactly.
It's funny. I followed this years ago, John, with Bill Gates. Right, so Bill Gates had so much Microsoft shares, he was selling 1 million shares a day. So there's a period of time where literally it was 1 million a day, million a day, million. And I was like, everyone kept saying insider trading. He knows something. He's unloading. I'm like, no, he has hundreds of millions of shares. Like, he has to liquidate some of this because he's got all his eggs in Microsoft basket. Now, he's probably wishing he held it given what's gone on with Microsoft over the past couple of years. But, you know, when you look at insider trading, you know, keep your eye on not just the fact that you see people selling, but how much is it of their overall total? Like this guy, Harvey Jones, he just sold 119,000 shares, and he's only got 800,000 left. I say only. You know, we all wish we had that kind of money. But when they've got millions left, I don't really pay too particular attention to it. I think they're just, you know, walking around money, as you put it.
So this Wednesday, I did a webinar. This is the backside plug here.
Oh, I love it.
Did a webinar on insider trading. We talked exactly what I just mentioned here. How do you have to look at? So there's things like the cluster of trading, which is this is what this is, right?
Right.
A cluster of trading that might be more significant, but also, you know, how is it relevant to how many shares are they actually sold and how many they control and how much did it change their position? And so, to your point, you're right. It's not as significant. I think it's more significant that it was a cluster of all these board of directors that were selling. Now, to your point, if you look at Walmart just recently, you know. Sam Walton, I guess the son of the founder of Walmart, you know, he sold like, you know, 10 million shares, but he's got like 2 billion shares, right? So, you know, it doesn't really, it's just a drop in the bucket for him. So, but when you start seeing clusters, especially among the C-suite, right, those corporate officers, then I think that is more significant. So this one I think is a kind of significant because it's all these board members. But I think to your point, yeah, they're probably just, you know, hey, look at, wow, the stock's up 200% in a year. You know, it's time for me to take a little money and, you know, buy the new yacht or, you know.
My $8 million a year salary just isn't enough. I'm going to need another 50 million to.
Yeah. Right?
Oh, the problems I wish I had, right?
Yes, exactly.
All right, so that was one question. So Thomasina, great, glad you got that one answered. I don't know if you have any thoughts on. There was some comments from Dave. He says, "Can you look at agricultural futures?" You got any thoughts on corn, soybeans, wheat, anything like that?
Yeah, so you know, I think there's the dollar influence on grains. Actually, let me show real quick.
Yeah,
because I'm setting this up for tomorrow's. Host disabled my screen.
I disabled your screen. We will put that right back. There you go. You have all the power now.
I have all the power
He's got
in the world.
Power.
And the tiny little. I'm setting this up for. Can you see this?
Yep.
This map of the United States. So, you know what is happening in the grain belt is we're still having this drought issue, and so the winter wheat a lot of these winter wheat fields, like in places in Kansas and stuff, the farmers are like literally just plowing the wheat in because it just didn't grow. So that's kind of what you're seeing in wheat, corn, and soybeans. We got to down the line the fall. But one of the things bar chart does do is we do have an agricultural department, and we came out and just recently re-updated the yield productions, and we've lowered them. So I think that's kind of what's going on in the grain market, that, you know, production yields are looking like they're coming down, and we're still having some drought issues in some of the grain belt areas, and that confluence with, you know, a weaker dollar. Now, what would really send the grain prices crazy would be is, you know, we see some, more exports, U.S. exports. And the other side of it is a weather related to South America, which is not talking, it's an El Nino year, which I don't know what that means, except, you know, I think it means it's going to rain more or it's going to not rain enough in South America. And so there's an issues with their crops. So there's all these things are kind of confluencing together, and that is a positive for the grain mud. But then again, if it rains tomorrow in Illinois, who knows? Then corn could go limit down, right?
You just never know. I mean, I like that you look at stuff like this because, obviously, if you're trading grains, this is going to be very relevant to it. But man, for me, I find it so hit or miss. I couldn't get consistency myself with grains. So
yeah, it's just if they're all little pieces of information, you add it together, and then all of a sudden, boom. You never know what sparks it, right? Pull up the ETF WEAT. That's the wheat ETF. Yep. We went from, again, you're talking about Bollinger Bands and oversold conditions. We went from, if you do like a weekly chart, we went from being oversold to now we're snapping right to the other side of the band, right? That's very common in Bollinger Band analysis. And, I kind of played this trade out in our Friday session, our market on close session. We took a trade right around May, and we said, well, let's do this as a mean reversion, and then we'll get to the mean. And we got to the mean, and then I said, okay, well, now it's on the other side of the mean. Let's let this thing run. And now, boom, it looks like it's going to go to the higher end. Now, don't be a Johnny come lately on this one, right?
Yeah, he's a little late to the party. I mean, and ultimately your target here is going to be that upper Bollinger Band, right?
Right, that 780 area. Yep. And if you look over to the left, there's a nice little supply zone there too, isn't there? Nice. So when you see those confluences together, that's also another confirmation that you can use.
There you go. Last one, and then we'll wrap up here. Margaret says, "Is grain subsidized?" I don't know, but I'm sure that some of it is.
Yeah, that's not it's outside of my pace. Yeah, but I do think they subsidize. I don't know if they subsidize them, how they do it, but I do know that grain farmers are subsidized.
Pretty sure they are. How. I don't know. Outside my pay grade as well. Let's talk about next week. You do these weekly webinars, and I like to let you promote your webinars. What do you got cooking next week?
I can't remember. Do you pull it up and let's see what it says?
Okay, let's go here to bar chart real quick. Let me bring that one up here. I just want to make sure I get it. Okay, so bar chart. So to go to find out about their weekly webinars, they do all kinds of stuff, and as well as the Friday show that John hosts. You go to Learn, and then you'll see upcoming webinars, and there's archived webinars there as well. And John does a show on Fridays called Market on Close, which is at 2:30 p.m. Central Time. And then, 5 questions to ask before investing in cryptocurrency. Wow, I could read through this, but I'm seeing a guy named Merlin. I guess he's going to be your
so listen, I know absolutely zero about cryptocurrency, except I know Bitcoin is something. So I needed to get an expert on. So who is my expert? Well, it's Mr. Merlin. So yeah, Merlin and I are going to do the show, and I'm going to really put the gun to him, so to speak, as I'm going to give him 5 hard questions, and I want him to explain to just the average investor why cryptocurrency should be part of your diverse portfolio, but also what things that we need to be aware of, what risks we need to know, and what forward-looking investment opportunities in the crypto space that could be potentially lucrative. And so, yeah, I'm going to definitely put you to the test, my friend, and I'm really looking forward to our hour together for that show.
Yeah, it'll be fun. And Sly Dog says 2:30. I can't watch that yet. I understand that it's 10 a.m. Pacific time. So
yeah, the Wednesday show is on at 1 o'clock Eastern time. But here's the thing, Snoop Dogg. Is it Snoop Dogg?
Sly Dog.
Sly Dog. Sorry. All of our webinars are recorded. They are free. And you can find all of them if Merlin would click on the little red button.
I'm already ahead of you, bud. Yep.
On the YouTube channel. And not only that, but Merlin, show them that all the way to the right, you did do a webinar for us, which is called The Future of Bitcoin. Mm-hmm. And in that one, I think you do a great job explaining the potential for Bitcoin sometime in March of next year, I think it is, right? The halving.
Actually, all the way through 2025. So the halving is going to be next year, but the full adoption. I'm really surprised it's such low views. I got to say, I was a little disappointed there.
Now that we've promoted, I want every one of your viewers to watch that one for us.
I liked it. I put a lot of effort and thought into that one. So we're going to talk, as John pointed out, we'll talk about cryptocurrency, digital assets, and not just Bitcoin or Ethereum, but kind of the whole ecosystem and where the threats are, where the vulnerabilities are, where the opportunities are. And for some of you that might be old hat that are regular viewers here, but some of you might be interested in that one, of course, share that link. I posted it in the chat. It's coming through there just a few comments back where you can click on that link. It takes you right to the webinar page so you can register for that one. And that will be next Wednesday at 10 a.m. Pacific, 1 p.m. Eastern Standard Time, or Eastern Time. And then I'll still do my show on Wednesday, but that'll be kind of a morning thing.
It's a tough job. You got to work 2 jobs in one day, right?
Yeah, that's true. It's actually, I got like 3 or 4 little things I got going on there in one day, but we do our best to make it happen. All right. Well, hey, John, thank you for coming on. I appreciate it. I'm looking forward to our next week's webinar. Grill me, try to stump me, get me all flustered on air. It's a tough one to do, but I think that you can do it.
I'm not going to do that to you, buddy, but I might try to Pearl Harbor you with one crazy question.
Excellent. Oh, I can't wait. I love being put on the spot. It's a good one. So yeah, looking forward to it. And again, thank you for coming on here and sharing your thoughts on natural gas, oil, broad markets, your Bollinger strategy, etc. Always appreciate your content. So thank you so much.
I appreciate the opportunity, and best of trading to you, and stay safe out there, my friend.
We will. And then good luck with the floods out there. We'll talk to you later.
All right, cheers.
All right, bye. Guys, that was John Rowland. He's the head of education over at barchart.com. You can find out more information by simply going to barchart.com. You click on that Learn tab, and there's all sorts of great free resources as I'm sitting here doing a gratuitous promotion for our webinar next week. But you click on the archive webinars, especially for those of you learning or wanting to learn new things. Great place here to go, and you see Unlocking Opportunities, Insider Trading, The Squeeze by John Carter, which is he's a great industry guy, indispensable tools for trading the market. So a lot of great stuff here for you. So hopefully you can further your education, market understanding from that. Now, that's pretty much it. That's all I got for you for today. Really nothing other noteworthy. There were some nice moves in our markets today, but I notice I'm running out of time here, so I'm just going to wrap things up with that. We'll leave it with John. Tomorrow, it's Friday. I have nothing scheduled for tomorrow, so what I will do is I will take all your questions, comments. I see you have TraderMerlin@gmail.com on your screen. If you are listening to recordings, you can always send in questions there or put them down below any of the YouTube videos. I'm happy to dive into those, and tonight and tomorrow morning I will take all the questions I didn't get to this week, throw them into the PowerPoints, and we'll answer those on tomorrow's show with a nice frosty beverage and hopefully cheering a wonderful trading week. Let's see, Tom says, have John ask the crypto expert why risk management stops applies to every asset except for crypto. Okay, yeah, it's a good question. And it's not that it doesn't apply, it's that in particular for me, I don't apply them. And I'll explain why that is on tomorrow's show. So thank you guys so much. Hope you enjoyed it. Hope you learned something. Again, click that link, register for the webinar. If you have friends who are slightly interested in crypto, that might be a really good opportunity for them to get a broad understanding of what it is and why it's so important. As Margaret says, hit that like button, and I will see you guys on Friday. Take care, everybody.